Hi, my name is Jason Watson. I'm one of the partners here of WCG, located in Colorado Springs, Colorado. We're a tax and business consultation firm. And today we're going to talk about the LLC. There are several business entities, and we discussed a lot of this stuff from our book. A lot of our material comes from our book, which has got a totally dorky name, Taxpayers Comprehensive Guide to LLCs and S-Corps. It's available on Amazon Kindle, and you can also download it on PDF. As mentioned, several basic business entities, sole prop, LLC, LLP, GP, C corporations, so on and so forth. Today we're going to focus on the single member LLC, kind of discuss some of the benefits, the advantages, all that good stuff, and then of course some of the downsides. When you form a LLC, you are filing articles of formation typically, not incorporation. That would be for a corporation. You also have an operating agreement, which is maybe the same thing as bylaws for a corporation. So forming an LLC is articles of formation. Typically, some states do call them other things, but it's definitely not incorporation. And then you have your operating agreement. Some of the benefits of an LLC, or one of the biggest benefits, is ease of formation. Here in Colorado, we can create an LLC in about 12 minutes. California, we can do all the paperwork in about the same amount of time. They take maybe 4 weeks to process it. So it's very easy to form. Most people can do it on their own. Some people do have us help them. You also get a little bit of protection. Now, some folks think that it's tort protection, like if my LLC owns my company car and I drive that car into a school bus full of kids, that I, the individual who drove that car, will not be sued, and that's just not true. If I have a rental in an LLC and I'm a lousy landlord and I don't fix the loose railing or I don't fix the water heater and something happens and somebody gets hurt, those individuals can still sue me. So an LLC does not provide this magic shield against torts. It does allow some protection, however, though, when you are signing contracts, for example. You enter into a lease, you sign as a member of the LLC, you do not sign as an individual. That landlord technically only has recourse to go after the LLC and not you as an individual. So there is some protection. It's just not as huge as everyone thinks it is, okay? LLCs also allow really nice ease of transfer because you have member interest and you can sell your member interest. You can sell a chunk of your member interest. You can do something. It's actually considered property in a lot of ways. So the ease of transfer also makes the LLC attractive. The IRS considers it a disregarded entity. So when you have a single member LLC, then you're considered a disregarded entity for IRS purposes. This means that you're not having to file a separate tax return for the LLC. And this is just a garden variety single member LLC that hasn't elected S-Corp taxation. So disregarded entity, it's going to show up on Schedule C if you're a business. It's going to show up on Schedule E as an echo if you have your rental in your LLC. It might show up on Schedule F if you have your farm in your LLC, so on and so forth. So from an IRS perspective, the IRS is like, hey, just whatever, we don't care, do your thing. However, a state might be different. California has their Form 568, that is their franchise tax and LLC form. Texas also has a franchise tax filing. So just because the IRS says, hey, we're not going to force you to file a separate tax return, some states might actually have a different tax return. And there's several examples. California and Texas are just a couple that we came up with quickly. Single member LLCs, because they are going to show up on Schedule C of your tax return, let's say if you operate as a business, all that income, all that net business income after expenses will still be subjected to a self-employment tax. That is Social Security and Medicare taxes. Those combined are considered self-employment taxes. We'll also talk about rentals and LLCs in another video. We're a big fan of having your rentals in LLCs. However, there are some downsides. We'll talk about that here in a little bit. But we'll talk about rentals in LLCs in a whole nother video, so stay tuned for that. We did talk about some of the benefits earlier. Now let's talk about some of the problems with having an LLC. We did talk about the protection that you might think you have from torts versus contracts, so we don't want to go into that again. But there are annual fees, there are franchise taxes. For example, California has a minimum of an $800 annual franchise tax. Plus, the Secretary of State will also have their own filing fees as well. Texas has an initial fee of $310. That's kind of nice, but nothing annually. Massachusetts is horrible. It's a lovely area to be, but it's a horrible state to have a business because they want $520 initially and then $500 annually just to have an LLC. So that's some of the problems, is the additional fees that you might have. Imagine if you had 3 or 4 rentals and you wanted each rental in a separate LLC in California. Instantly now you have a $3,000, $4,000 annual franchise tax just to have your rentals in LLCs. Another issue is that it's going to be in the public record. I can look up anyone's business name and get their name, the individual who organized the business, or the members of that business. I can also get their address. A lot of people use their home address. So there are some issues there. You can create some anonymity, I guess, or you can be anonymous. There are some steps you can take to make it so people can't look you up necessarily on the Secretary of State's website, but there are issues with that, so be aware that everything that you're filing is generally public record. California has a state disability insurance, SDI. You, as a business owner with just a garden variety LLC, cannot avoid that, even if you were to S Corp elect that LLC. So sometimes in California, we want to create corporations rather than LLCs just to avoid the SDI, the state disability insurance. Let's talk about this thing called the PLLC. Sometimes you see that in certain, well, I'll back up. Certain professions, and we got them listed there, accounting, law, engineer, physician, maybe a couple others, they are required to be professional LLCs or professional corporations, basically professional businesses. Here in Colorado and also in Texas, in several others, they allow for a professional LLC. So you don't have to be a corporation, a PC, professional corporation. California, however, if you're an accountant or a lawyer or an engineer in California and you want to create an entity, you have to be a PC, you have to be a professional corporation, okay? And many other states also force you into that PC designation. Let's talk briefly about S corporations. We're going to go into a zillion videos about this later on, but an S corp is not an entity. It's a tax election on the underlying entity, okay? Then that changes your disregarded LLC. Let's say we have an LLC that's disregarded. We add an S corp election on top of that. Now the IRS says, wait a minute, you're no longer disregarded. Now you're forced to file what's called Form 1120S, which is the S corporation tax return. So for an LLC, S corp election is going to reduce that dreaded SC tax, that Social Security and Medicare tax. And for a C corp, it's going to eliminate the double taxation. And again, we'll discuss that in our C corp video, which is going to be coming up soon. Let's talk a little bit about audit risk. S corporations and partnerships have a much lower audit rate risk than just a normal single member LLC that has not designated itself to be taxed as an S corporation. We'll talk about that also in our S corp videos and the partnership videos coming up, but just understand that when you file a Schedule C because you have a disregarded LLC, or you file a Schedule E for the same reasons, that is going to have a higher audit rate risk than if those same activities were presented on a business entity tax return like an S Corp return or a partnership return. Let's wrap this up, okay? So LLCs provide a quick launch, right? Like I said before, we can create one in 12 minutes. In Colorado, we sometimes turn the lights off to make it challenging and do it in 15 minutes. Sometimes we use our left hand, but all in all, it's pretty easy to launch. It's disregarded by the IRS, but not all states, so be careful of that. And remember that an LLC does not just eliminate taxes or change your taxation if you're already subjected to Social Security and to Medicare tax from your business activities. Putting all those activities into an LLC is not going to eliminate that. The only way to reduce that is through the S Corp election. So feel free to contact us, okay? So call us, there's a phone number there. We can also email us as well. You can visit us at WCGInc.com. Our book is entirely online as well. You can also, like I said, get it from Amazon, Kindle, and all that good stuff. We have a lot of content on our website about businesses, and we do focus on small businesses. We are updating our blogs probably once a week, once every couple weeks. That's more current events type stuff. So check that out. And we also have a wonderful video or set of videos on our website as well. My name is Jason Watson with WCG, and we hope to talk to you soon. Thanks.
Thank you for watching our video. A PDF of the slide deck is available with the link below. Also, please contact us at 719-387-9800 or email us at support@wcginc.com. Most of our video content comes from our book, blog posts, and website, and is available at wcginc.com. Have a wonderful day.